Hi there, this is Roy Van Winkle with the Keller Williams Realty and the Van Winkle team. You know, in March, we headed into the COVID crisis and everybody would have thought that the real estate market would have crashed. Now, to a certain degree, March and April were down months in unit sales, but the pricing stayed pretty consistent in those 2 months. But ever since that time frame, the real estate market pricing and appreciation and unit sales have been on a gallop. So the question is will our real estate market stay strong into the end of this year and possibly into next year? Now, those that know me well know one of my favorite sayings is the best day to buy real estate was yesterday. We know what yesterday's real estate market was. We don't know what tomorrow's real estate market's going to bring. Now, typically in an election year, what I would say is that the real estate market tends to take a big, deep breath just to try to figure out what's going on. It's not going up, it's not going down, it's just kind of in a state of hold. But you know what? I don't think that that's what's going to happen this year. So let's take a quick look at where we are so we can get a better idea of where we're going. So in Snohomish County in August, there were about 1,200 transactions closed, which is about on par where we were in 2019. There were about 7,500 closed transactions year to date this year versus about 8,000 closed transactions in 2019. So we're only off about 500 closed transactions year to date, which I think is more of a factor of availability of inventory than it is of demand. In August, however, the average price rose by 14.5% over where it was in 2019, pushing pricing from $539,000 to $617,000. Now that also pushed our year-to-date numbers up to 8.5% over where we were in 2019 when it comes to pricing. So if you ask me, what's causing all this? Well, in July, new home buyers, they really got a big boost. So interest rates in May were about 3.23%. And in July, interest rates dropped to about 3%. Now that drop gave buyers about a $15,000 more purchase power than they were in May. So if we play that out and we say, okay, so that continues to drop in the fourth quarter to say 2.7% interest rate, that could buy buyers about $32,000 more of a house than they could have purchased in May. So obviously, as demand is going up, inventory is going down. And with that said, what I would expect is that house pricing will continue to stay strong through the rest of the year. The pandemic continues to impact the economy, but home buyers continue to take advantage of historic low interest rates. Existing homeowners are still in control, though, as their home equity continues to rise. So look for a strong finish this year, and possibly into next year if the Fed holds interest rates at these record lows. If it were me, I would try to take advantage of the market I know versus the market I don't know. So as always, if you have a question on whether or not it's the right time for you to buy or sell, I'd love to talk to you. Just call, text, or email me anytime. Thank you for watching, and this is Roy Van Winkle with Keller Williams Realty and the Van Winkle team.